Welcome to part 3 of a 5-part series, How to Analyze a Stock. In this video, we will look at potential risk and reward of a stock based on how big it is. As investors, there are 4 categories of size that we want to look at. You've got large cap or capitalization stocks, mid cap, small cap, and penny stocks. Now, what is capitalization? Let's talk about that for a second. Capitalization, or market cap, is the number of common shares issued times the current stock price. It basically just represents how big the company is for that stock. So big companies are going to have large capitalization. For example, right here we've got Coca-Cola. Now, right now we're in Yahoo Finance, and if you go to the left side here and click on Key Statistics, the very top right here, that's market cap. That's what you want to look at. Now basically, large cap stocks are any stocks that have a capitalization over 10 billion. You can see that with 178 billion that Coca-Cola is well above that. So definitely a large cap stock. Mid cap are considered to be 2 to 10 billion. Small cap are 300 million to 2 billion. Anything under 300 million, I'll just call penny stocks. Some people break it down a lot further than just these 4 categories, but this is good enough for our purposes. Okay. So when you have big stocks, they're going to be more stable and they're going to be steadier. Now that sounds pretty good, doesn't it? To have a steady stock and have less risk. The problem with that is that the company and the stock will not deliver to you as much return during the good times. Let's show you an example. Let's go to the chart for Coca-Cola. Now, over the past 5 years, you could have bought Coca-Cola right around $25 exactly 5 years ago. And today it's worth $40 a share. And so that's about a 60% return. That's pretty good. But it's a very stable and steady return. You know, and that's great for some people. That may or may not fit what you need. It depends on how much risk you want to take on. Let's look at a different stock. This is Overstock.com that sells all sorts of stuff online. So if you go to their key statistics area, they're only $666 million in market cap. So obviously they're a small cap stock. Let's look at their stock chart, see how much risk they have. Well, if you look at the last 5 years, they are all over the place. Look at this. It's all the way up here, $25 per share, down to less than 10, up to 25, down to 5, up to 25 again. So, I mean, think about it for a second. If you had bought Overstock down here at 5, you could sell it today for $28 a share. That's great. That's more than 5 times your money. But unless you are very familiar with this stock, who's to say that it wouldn't have gone all the way down to 50 cents per share down here instead of up? So you would have lost, 80 to 90% of the money that you put into this. So unless you're watching very carefully this stock, you're taking a lot of risk to buy it. That might be okay with a small part of your portfolio, but if I had $10 million, I certainly wouldn't put it all on this stock, or any stock for that matter. Okay, so that's one of the things you need to look at. Let's look at a smaller stock even. This is a penny stock that I bought a long time ago, about 10 years ago. This has a market cap of $1.5 million. Very small company. If you look at the profile for this company, they have 2 employees. Wow. I think they have huge potential, so I bought like 2,000 shares of this stock, which is not that much money. But I bought it 10 years ago when it was worth more than double, 20 cents per share. It was over 40 cents. So, I'm certainly not making money on this, but I might someday. So I haven't put a lot of money in this. So let's look at this stock chart to see what it's done. Okay, over the last 5 years, this has gone from $1.40 all the way down to about 5 cents per share. Actually, lower than that, 1 cent per share. And then it's bounced up to 40 cents per share. So this thing's volatile. You could make or lose a whole lot of money with this stock. So, in fact, I wish I had sold it when it was up here, or else they did a reverse split. Maybe that's what that is. But anyway, I bought it when it was up here somewhere, and so I've lost money on this for sure. So anyway, just know whenever you buy a stock that there is a lot of risk or reward depending on how big it is. For me, mid to large cap stocks pretty much where I focus my investment money, because there's plenty of risk in stocks like that as well as return, and they're more predictable. You're more likely to make money with a stock like that. Now, look at IBM. IBM's had a good, steady return, but it's been slow. You know, this is a 5-year chart. So we've gone all the way from 80 to 200. That's a good return, but it's not as crazy or as volatile as some of these other stocks. So just keep that in mind when you're investing. Have a great day, and look forward to seeing you in the next video.